the golden anchor. Why 2026 is the year for strategic allocation. Good morning, afternoon, everyone. As we navigate the opening weeks of 2026, the global financial landscape feels significantly different than it did just a few years ago. We are no longer just recovering from past crises. We are operating in a new economic reality. Today, I want to talk to you about why gold, the oldest form of wealth, has transitioned from being a backup plan to becoming a strategic priority for 2026. Last year was historic for the yellow metal, and many are asking, did I miss the boat? My answer is a firm no. In fact, 2026 is the year where the structural reasons for holding gold are stronger than ever. We are looking at a market where price targets from major institutions like JP Morgan and Goldman Sachs are pushing toward the $5,000 per ounce mark. But this isn't just about a number on a screen. It's about what gold represents in a world of uncertainty. To understand why gold is essential this year, we have to look at what the smart money is doing. For the first time in nearly 30 years, central banks are holding more gold than U.S. treasuries. This is a monumental shift in the global financial architecture. Emerging markets, led by China and India, are diversifying away from the dollar at a record pace. They aren't buying gold because they're afraid of a crash tomorrow. They are buying it because they want to protect their sovereignty and their purchasing power over the next decade. In 2026, this institutional demand provides a massive floor for the price. When the world's most powerful banks are betting on gold, individual investors should take notice. We also have to address the elephant in the room: debt and inflation. Despite the aggressive rate hikes of previous years, inflation remains sticky. Government spending across the globe is at all-time highs, and the cost of servicing that debt is putting immense pressure on fiat currencies. Gold is the only asset that doesn't require a signature from a government or a promise from a bank. It is nobody's liability. As the purchasing power of the dollar and the euro continues to erode, gold acts as a stabilizer. While your paper money might buy less at the grocery store or the gas station, an ounce of gold historically maintains its ability to purchase the same amount of real-world goods. In 2026, gold isn't just an investment, it's an insurance policy against the mismanagement of the global economy. Then, there is the geopolitical reality. We live in a world of fragmentation, trade wars, regional conflicts, and the shifting of alliances are no longer temporary shocks. They are permanent features of our landscape. In 2026, we talk about a structural risk premium. This means that uncertainty is now baked into the price of everything. Gold thrives in this environment because it is a neutral asset. It doesn't care about election results in the West or trade sanctions in the East. It is a universal language of value. When markets get volatile, as we have seen recently with the fluctuations in the tech sector, gold provides the ballast that prevents your entire portfolio from sinking. So, how should we approach it? In 2026, we are seeing a move toward a more balanced all-weather portfolio. Financial advisors are no longer suggesting just a tiny 1% or 2% allocation to gold. Many are now suggesting that 5% to the 10% or even 15% for conservative investors is the sweet spot. Whether you choose physical bullion for ultimate security or ETFs for liquidity, the key is consistency. You don't buy gold to get rich overnight. You buy it so that you never stay poor. It reduces the overall drawdown of your investments. When your stocks are down 20% and your gold is up 15%, you have the emotional and financial stability to stay the course. To wrap up, let me leave you with this. Gold does not need a crisis to rise in 2026. It simply needs the world to continue behaving the way it is, with elevated debt, policy uncertainty, and fragile global alliances. Gold doesn't chase fear. It absorbs Italiano. As we move through this year, don't view gold as a speculative trade. View it as your anchor. In an ocean of digital volatility and paper promises, gold remains the one constant. It has outlived every empire, every currency, and every bubble in history. 2026 is the year to ensure your wealth is anchored in something real. Thank you. How's